But you have to realize, in a bear market, everything gets annihilated, which we're seeing today. And it's tough. I get it. It's tough. Now, the question is, when does this end? Or how does it end? And we used to like quick bear markets, and then the Fed's like, all right, we got to reverse costs and lower rates again or throw more money out of it. One thing that can help it end is if the Fed stops tightening, that's going to help. But they haven't even started to raise rates yet. Think about that. I mean, we're down. The major indices are all down 20% from their highs. This is a true bear market, and the Fed hasn't even started to tighten yet. I mean, never in its history have we had a tightening cycle when we're seeing stocks across the board trading below the 200-day moving averages, all the major indices. We've never seen that in history, ever. That's happening. They haven't even started raising rates yet. We could bottom when inflation eases. But as you know, it's not going to happen. It's not going to happen fast. I mean, inventories for commodities are at 30-year lows. We have massive supply chain issues. There's nothing to get built or delivered in a reasonable amount of time. The war with Russia and Ukraine, with oil price hitting some of the highest levels ever. We'd like to see that end. But we're seeing oil prices surge. And yes, they came down below 100. But oil is a direct cost. It's a component for almost every single company. I mean, I'm not just talking about Ubers, Lyfts, who are raising their prices and having fuel surcharges, or UPS, FedEx, companies like that, or airlines. But you look at the Walmarts, the Targets, the supermarkets, or massive trucking fleets. And these guys are going to pass that inflation down to who? You, me, the consumer. But even with the Russia-Ukraine war, if we could have some kind of end, which they must have said pretty much over the last 3 weeks, at least 10 days, that, hey, we're talking, peace talks are possible, the markets are up. How many times do you say the markets are up because tensions are easing? They've never eased. I mean, Russia said, we're talking to you, but we're taking you over. We're blowing you out of the water. I mean, it's sad what's going on. But when will it end? What's Putin going to do after he takes over the capital of Ukraine? Does things continue to escalate? Will they cut off oil supply to Europe, which will devastate Europe? Sell that oil to China to make up the difference? Will they partner with China to create a global superpower that rivals the U.S.? That's pretty scary. Will China take over Taiwan, the epicenter for semiconductors, which go into every single product in the world that requires a battery or plug? I mean, so when we're looking for a bottom or trying to figure out a bottom, we want something that we can look at with certainty. And we have more uncertainty than we've seen since the credit crisis. And COVID was uncertain. We closed. It was kind of easy. Okay, now we're injecting money to the system. We saw. I mean, with the credit crisis, we didn't know to the full extent how crazy it was. The Fed didn't know. The Fed didn't know AIG was insuring all this shit. If AIG crashes, the whole entire market crashes. They had no idea. I mean, it took them like mid-2008 to figure that out. I mean, they let Lehman fail. If they really knew what was going on, they would have never let that happen, because that's what really put a wrench in everything. Halted the markets, the credit markets. And that's massive uncertainty. You don't know where the bottom is. Finally, let's inject money or cash into the banks. Again, whether you agree with it or not, at least you're securing up the banks, which they didn't really have to lend out that money, different to when the Fed's doing right now and just printing money like crazy. But during the credit crisis, at least the Fed had the option to print its way out of that mess. This is different. This is different times, guys. You can't print more money. This is going to cause more inflation, and you have to raise rates aggressively, which the Fed does not want to do. They don't want to do. They want to disrupt the markets. You have to raise rates. You have to raise rates. Inflation's out of control. It's not slowing. And inflation is just through the roof. It's at all-time highs, inflation. If we use the same metrics that we calculated as CPI back in the 80s, we're at all-time highs. Inflation has never been this bad in our history. Which is CPI and the method that goes into that, I forgot how many, I think it was revised more than 30 times since the 80s. To always find a way to account that we don't have a lot of inflation. Even though we knew we had inflation over the past 10 years, regardless with the CPI under 2%. We're all seeing it. We're all paying more for our bills, but they manipulate that to make it that it almost always never shows inflation, which is kind of amazing because now it's at 7%. It's supposed to be at 2%. It's at 7%. So now what are we seeing with the market? We're seeing the 10-year move higher, which hurts gold and metals. Start seeing demand come out of the market as people start adjusting for those price increases that we're seeing, or inflation, or, can no longer afford to buy the numerous amount of things they were able to buy last year or the year before, or prior years. So the result is less demand, which is why oil prices are starting to come down now, especially with China locking down again because of COVID and Shenzhen and the Apple plant. I mean, that's, holy cow. You want to talk about even more supply chain issues? There you have it. But these are the things that happen in a bear market. So when I was saying that it's the opposite of a Super Bowl market, I think you need to put it in perspective. Because on the surface, you're like, no kidding, that makes sense. It's the opposite. But when you really put into details like this, what you saw in a Super Bowl market, every single thing went higher no matter what. It didn't matter what you bought. It didn't matter fundamentals. Going higher and higher and higher. In a bear market, everything goes lower, and it doesn't make sense. It's like, this company just reported great earnings. Why is it down? Because people are forced to liquidate. They're getting margin calls. So if you're seeing something go higher, they're using it to sell. That's why almost everything that's going higher, outside of oil, which has been going steady high over the past 4 or 5 months, and even the war obviously gave it another leg up, but we are going to see less demand. Seeing it across the board, even with EVs trying to be launched, but supply chain issues, all this stuff. You throw that in where the Fed is now tightening, going to stop buying bonds, and inflation's out of control. Holy cow. But in a bear market, everything goes lower, just like everything goes higher in a Super Bowl market. And everything goes low. The speculative crap's going to get hit the worst, just like it outperforms the most during great times. But you're also going to see good names with strong earnings that are cheap now, big moats, strong growth potential. They're going to get nailed. They're going to get nailed, and they are getting nailed.